And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show. This is the show where we bring you where the action is in the broader markets, and yet another striking week. We will get into it in great detail. Let's take a look at what we are going to be covering here today. As usual, we're going to take a look at the broader markets. Where did we close the week? And then take a look behind the curtain and see how these sectors are faring. A lot of shuffling taking place last week that you'll want to be aware of. And then from there, I will share with you some of the top headline news that drove price action this week. And all of this, of course, is with an eye toward helping you be super prepared as we head further into September, which has historically been a tough period, more for the fact that over the past 50 years, the month of September, the markets have declined, I believe, about an average of 1%. So we're seeing not so much negative, but certainly a lot of volatility. We'll get into that. There are stocks moving above resistance with this week's rally, and there are some themes emerging. I will get into that, as well as pockets of strength that are taking place amid Wall Street upgrades. They are still having a big impact. We don't really begin earnings season for another few weeks, but we are starting to see those upgrades coming in. And then what's driving select commodity stocks? I will get into that and share with you some names. First up here, though, let's take a look at some of the news from last week. Now, not a headline news, but certainly worth noting is the fact that interest rates, this is going to be yields on those treasury bonds, still remain elevated, as is the US dollar. It was hit yesterday on Thursday, a multi-decade high on that dollar. So we'll take a look at some of those areas impacted there. And then alternative energy stocks really came to life this week. A lot of that centered again around analyst upgrades taking place. Also, we did hear from a number of Federal Reserve officials this week, and each time there was generally a reiteration similar to Fed Chair Powell's talk yesterday, where the aggressive policy is expected to remain in place. Interestingly, the markets were able to shrug that off for the most part. Next week, super important inflationary data due. We will get consumer price index information on Tuesday, core CPI, as well as other data. Retail sales and consumer sentiment will be coming out next week as well, all very closely watched by the Fed. And of course, investors will be keeping a close eye there as well. So let's go ahead and jump right in. Take a look at the broader markets. This is a daily price chart of the S&P 500. And you can see that we did have a holiday shortened week. We started on the downside this week. However, the markets were able to rally into the close for the week. So we did manage today. We're close. Yes, we are at the close, and we are now above this key 50-day simple moving average. And that is a very important line in the sand, and a break above that is constructive. Now we want to also pay attention to those outside momentum indicators. The RSI here just dipping into positive territory. So super near term, the markets are looking constructive. We do have other areas of upside resistance potentially here with this 21 and then 200-day simple moving average. And then your stochastics, these are generally faster moving momentum, not quite in positive territory. We want to see a move above that 50, but we are certainly headed in the right direction. A lot of this, you can take a look at historical precedent, go ahead back to this July rally and take a look at the dynamics at that time when we broke above the 50-day. However, I would argue an entirely different backdrop. Interest rates during this July into August period were dropping. So despite an elevated interest rate environment, we are seeing this upward move, mixed but near-term positive. So from here, let's go ahead and take a look at some of the underlying sectors in the S&P 500. You want to be aware of any rotation that is taking place or rotation as it relates to areas that are on the move to the upside or downside. So each of these 2-month daily price chart views of the 11 sectors in the S&P 500, I've gone ahead and added an RSI indicator and then sorted the group in descending order. This is all about identifying up here in this upper left quartile areas of strength relative to the weaker sectors. Equally important, this is something I do each week, certainly even beyond for my work with my MEM Edge report. But as important as it is in identifying current strength, you also want to be aware of groups that are moving in and out of favor. So with that in mind, let's go ahead up to this forefront. Utility stocks, for those that have been watching, have been relative outperformers. One of the few sectors that's remained above this key 200-day simple moving average had a nice rally last week. And a lot of this is centered around utility companies that have alternative energy sources of or alternative sources of energy. Those stocks are on the move. And then also their incredible ability to continue to raise rates to utility customers, which is helping them keep their growth prospects in play. So utility stocks remain up at the forefront. But let's take a look at a group that is newer, and it has been progressing. If you watched last week, you'll know that we noted, and certainly subscribers to my MEM Edge report were alerted to the fact that consumer discretionary stocks at the very least held support here at this 50-day simple moving average, and we are seeing a nice rally here. It was the top performing industry group for the week, up almost 6%. That's relative to the S&P, up 3.8. So we can see the RSI up here in positive territory, and we are poised to get this MACD crossover, black line up through the red, indicating this pullback could be behind us over the near term. We do, of course, still have upside resistance, but I am going to get into thematic moves into these retailers as we move forward, or put the cat out of the bag, but there will be some retailers among them. And then also very new to this group in the upper, by the group, I mean these three stronger areas up here, is financials. And I will get into those areas that are on the move in the financial area. This is a group that did undercut that 50-day, but similar to discretionary, on the rise. RSI trending upward, MACD poised for that crossover. And this is interesting because financial stocks do generally fare well in a rising rate environment. I mentioned interest rates. We'll look at a chart next segment, but it is beginning to, I would say, wake up. This is an area that is the first in the industry groups that once earnings season starts in a few weeks, it will be financials up there at the forefront. So from here, let's go ahead and take a look at some other areas on the move. Healthcare had been struggling, but this is also a top performer, up 4.6% for the week. You can see really how down and out the group had gotten. I will share with you a couple of highlights there, because take a look at the dynamics. RSI heading into positive territory, nice MACD crossover on that MACD. And then from here, let's go ahead and take a look at some of these weaker areas. And I want to make sure I'm not missing, because basic materials up 5.3%. I talked about that commodity move, so we will get into that as well. So here in the weakest area, tech had been here. This is the third week in a row that it's been lagging, and we can see that it is attempting to reverse, but not as robust as the other areas we've been viewing. It did outperform, or actually it performed just below the S&P 500. So it's trying, but we're not seeing as much of a bounce. We're not seeing as much in the way of momentum. We can see that the RSI and MACD are in the throes of trying to reverse, but again, not with as much strength as the other areas that we've been viewing. So let's go ahead from here, take a look at another view of this 2-month daily price chart candle glance feature on StockCharts.com. From my work, I have a number of ETFs that I pay close attention to, because they are really instructive as far as providing insight into what's really taking place in these markets. The S&P up 3.8%, the NASDAQ up 4.2%. Interesting, But what's that all about? So let's take a look. I have these ETFs again with that RSI descending order. And from here, let's closer view, we can see the yield on that 10-year. And I talked about the fact that the interest rates, and in this case, that 10-year yield remains elevated. It's up here at 3.3%. Anything above that 3% level for this 10-year is going to be highly impactful to growth stocks and in particular technology. So let's take a closer look here from this June actually into August. This is when the yields were declining, and that's when we saw that rally, certainly in the NASDAQ, in technology and elsewhere, as interest rates began to rise. That was one of the reasons that growth stocks fell out of favor. So it is of interest that we are seeing some of these growthier areas outperform despite a continued elevation here in yields. From here, I talked about the US dollar, and we did see it pull back today, but overall, it does remain in an elevated position. The impact here, a rising dollar will normally push commodity prices lower, but we are not seeing that universally. So let's go ahead and take a look. I mentioned that healthcare was on the move, up 4.6% this week. Here is one of the areas that outperformed, and this is biotechnology stocks. IBB is the ticker for this ETF, up 6%. And this is very striking because biotech names are riskier. Most of them, there are over 500 names in this group listed, and only about 15 actually have earnings on the table. The other companies are more in their development stages. So again, it is a riskier area, but nice upside price action. It did not close above this 200-day, but there is definite vibrancy taking place beneath the surface here in biotechs. And then also up here at the forefront, I mentioned financials. Let's take a look at one of the areas in that financial sector, and that is banking stocks. KRE is the ticker symbol. This is the S&P Regional Banking ETF. And you can see this sharp V-shaped recovery attempt, up 3.9% for the week. Certainly still has work to do in the way of turning bullish or positive, but worth noting. I have a number of names on my watch list, and again, MEM subscribers will have access to that. But these are bank names that have broken above key support and are looking quite compelling. Another area up here at the forefront, and this is something that I may have spoken about last week, but I did certainly in my report, and that is the fact that retail names are on the move. This is XRT, the S&P 500 retail ETF, up 5.3%. We're not entirely out of the woods yet, but we do have a positive RSI here. And again, we'll get into some of those names. Let's take a look at some of these weaker areas of note. And very good news, volatility down in that weaker area. And it is continuing to pull back as the broader markets are on the rise. And we can see this is the VIX volatility index has broken back below that 200-day, and that is good news. Generally, a lowering of that volatility indicates more confidence in the markets. This period here from June into August is when we saw that rally in the markets, and you can see volatility continuing to decline during that period. And at this time, we are seeing the beginning stages of a lower volatility index. Let's go ahead back, take a look at some of these other highly relevant ETFs here. And what I did want to point out to you is the fact that Brent crude, this is the per barrel pricing for oil, is down here at this 89 level, certainly well below the elevated levels we've seen earlier this year. And the impact, we did see energy stocks were up only about 1% for the week. So definitely impactful. So as mentioned, these are ETFs that are really going to help you get your arms around what may or may not be taking place. Let's take a look at another area. Semiconductor stocks up almost 5%, but rather myopic, not an area for me that I would put money to work here, but I do have a watch list of stocks should the group turn more constructive. And then here we are with software, IGV up 5.7%. Not again, we are just now getting into positive territory, but hopefully I can get to a couple of names in that area to share with you stocks that would be ideal for your watch list as this potential rotation takes shape. Of course, next week we do have that big news on Tuesday, and we shall see how the markets respond. It's been quite volatile, but again, as mentioned, staying on top of some of these themes that have and are taking shape. So let's take a look. What I am going to begin with is sharing with you a stock in that healthcare space, and this is a company, not a particularly large name. They do provide sleep disorder equipment. For those with sleep disorders. But what I did want to share with you is actually, I can do better than this, but this is a good start, RMD, in the sense that it has broken back above the 10, 50, 21, and 200-day simple moving average. And I'll mark up some other characteristics that would have this on my watch list. And from here, we can see that this week's rally has occurred on nice volume. You want to see that, indicating the stock is under accumulation. Again, this break above that 200, we can see the RSI now in positive territory. We are seeing a black line up through the red, that MACD crossover. If we can get into positive territory, we're awfully close. That would be even more constructive. So from here, let me go ahead and share with you some other names that are setting up potentially, and again, with an eye toward building out your watch list. Here's a data storage company, Pure Storage, PSTG. Again, not a particularly large company, but technically it has the characteristics and also it has the earnings. This company came out at the end of August with numbers that were 45% above estimates, 130% year-over-year group growth. And I did mention it is a data storage company, but let's take a look at the dynamics here. When we look at the broader markets pullback, we can see that this company held up quite a bit better, certainly than technology names in general, pulled right back to this 50-day simple moving average, traded below it. Buyers came in, supported the stock, and now this week, it certainly has less work to do as it relates to turning up above these moving averages. And then your outside momentum indicators, certainly your RSI, in positive territory. So from here, I am going to share a couple of other names, and this is where themes come into play. And when you are screening, which is something I do every day very regularly, and with joy, I might add, I'm on the lookout because these themes, by that I mean when you see stocks of a particular nature that are beginning to thematically rise in tandem, that gives you confidence that there is a sound reason that demand for the products in that space are there. So here we are with Paycom, PAYC, and I did share with you the software group, not really robust, but certainly trending higher. We can look here with PAYC. This is a name that was on my MEM Edge report during this July into August period here. However, we did remove it as the momentum indicators turned negative. But here we are now. More recently, it pulled back very orderly to this 50-day, has broken above these shorter term moving averages with a positive RSI. Let me share with you another name that is in the same software space as Paycom, and that is Paylocity, PCTY. And this one really didn't even get back to that 50-day simple moving average, has broken back above, and your RSI and MACD remained in positive territory despite a sell-off in software. Let's go ahead and take a look at that IGV, and you'll see what took place elsewhere in this industry group. So the theme that I am sharing with you with these stocks is that within software, it is the human capital, or it used to be called human resources. They do provide back office software, cloud software products. And most importantly, it is all about keeping employees engaged and then also increasing productivity. And that's a very important item now, as we see a number of people that have left the workforce for other endeavors, and the need to have a very constructive and robust back office period in that area. So let's take a look outside of that, and I'll share with you a couple of other names that are compelling or interesting, and you will see a theme as it relates to the chart. This is GPN, Global Payments, similar to Visa in the sense that they are a payment processor. We can see it had this nice break above these moving averages, pulled back very orderly to this 50-day simple moving average, is now back above each of these moving averages, which can act as resistance, and then your outside momentum turning positive. So I do think hopefully you can see a theme as far as names that are capturing my attention in the sense that they have pulled back and are coming back above key areas of resistance. So from here, I talk about XLY, consumer discretionary. Again, nice orderly pullback, pulling up. We looked at XRT. From here, let's take a look at some of the names that are helping. We'll start with a couple of large, well-known companies. Walmart. We can see that Walmart had this big gap up here in response to earnings that were ahead of estimates. From here, it did pull back, and this week it is now poised to break back above this 200-day simple moving average. Another large cap name that we can look at in consumer discretionary is Costco. They have not reported their earnings yet, but they're not due for another 2 weeks. But we can see the group found support at the 200-day and potentially rising. Not overly dynamic, but certainly worth noting. Both companies are bellwether names in the discretionary space. But as it relates to themes, this is something that I shared with you last week, and it is continuing to take shape. This is discount retailers. TJX is TJ Maxx, and we can see this is another name similar to that discretionary group, pulled back to the 50-day simple moving average, and then from here has broken back above potential resistance at that 200-day simple moving average. Pretty nice volume, but we are seeing the momentum indicators trend upward. From here, I will share another competitor in that space, and that is Ross Stores, breaking up above this 200-day. Now, the relevance on its own may not appear particularly compelling, but when you look at any number of other retail stocks that are down and out, this is an anomaly, or certainly a positive anomaly. And I'll share with you one other discount retailer here, and that is Five Below, FIVE. Not as positive. It still has work to do here, potentially turning, but the momentum is heading upward. And again, a concept as it relates to among retailers, given the growth prospects being, there are still recession fears out there. So these discount retailers are outperforming. So one other area that I do want to talk about and share with you are stocks that have broken out. We are seeing base breakouts, cup with handles, breakouts as well. And within that, there are seemingly not a lot in the way of themes, but let's go ahead and take a look at some of these names that have broken out. In this case, this is a daily price chart of FactSet, FDS. They are a Wall Street research firm, and we can see it had this nice rally up here into the end of August, pulled back, and is in the throes of breaking out of this base. Positive, your RSI never got into negative territory there. This is what you want to look out for, because this is a name that is exhibiting superior strength relative to the broader markets, not as much of a pullback. And here we are poised for a new near-term, or at least 1-year high, which is quite constructive. Another company in an entirely different space is Archer-Daniels-Midland. And this is another company that, of course, we will see a lot of names that had nice rallies from July into August, but not a lot of the names broke above resistance. ADM did. Superior outperformance, pulled back less than the broader markets, and is poised to break out of this 2-week base. Last name, let's see if we can take a look at, because one thing that I have not been sharing with you is, I'll go ahead and take a minute here and mark up ADM, similar to FactSet. But for those of you that are not familiar with that cup with handle base breakout, I will share with you the dynamics that are at play here. So when you are on the lookout for a stock that is exhibiting a base cup with handle base breakout, one dynamic is the fact that the stock hits a near-term high, pulls back, forms the right side of that base, but does not quite make it up to that prior high. It has a pullback phase, and that is when that handle is formed. And the breakout occurs when the stock price breaks above this right side of the cup formation here. So that is that cup with handle base breakout. And it's, again, not a common occurrence. You're not going to see a lot of names having this bullish price action quite yet. Let's take a look at another name that is also in the throes of a cup with handle base breakout, a little bit more sloppy, but same conceptually. This is Boston Scientific, BSX. You can see it hit a near-term high here, has the right side of that base formation, and the handle breakout taking shape here today. So from here, I did want to also take a look at some of these other, and again, this is not common. We're not seeing a lot of base breakouts in the current environment, given the steep sell-off. A lot of names still well below resistance, but this name has broken above. This is QSR Restaurants, and they have a number of Burger King and Tim Horton type fast food restaurants, and you can see that the stock is poised to break out of this 3-week base. So of note, and then one other name that we can take a look at, and this is an area that I mentioned to you is on the move and did remain positive. That is utility stocks. We're looking at SRE, Sempra. This is a company that provides electricity to residents in the San Diego area. And certainly SRE and other California serving utility companies did make the news last week because of an 8-day heat wave. And there was actually, I live in Southern California, and there was an excessive heat warning. But the news relative to SRE and other California utility companies is that they had their rates rise to a 2-year high in the throes of that. But they also had were able to keep energy going despite super high usage. So SRE breaking out of a very lengthy base, potentially to a new high. I will leave it at that. I want to thank you for stopping by today. Have a great weekend. I'll look for you here next week.